Hi guys, welcome to today's episode of this channel. In this channel today, we're going to be talking about something very basic and important for every business owner and individual to be aware of when it comes to transportation of products. Usually at every point in time, as a business owner, you want to move your goods from one location to the other. So therefore, you may need to get an insurance. What kind of insurance do you need? Usually when you are moving goods inland transit, maybe you are moving on land from one location to the other, we usually say get a goods in transit policy. But however, in today's video, what I want to be dwelling on is when you are moving your product on the sea, meaning you're moving your product from one location to the other, but it is via sea. What insurance do you need? You actually need what is called marine insurance. So what is marine insurance? In today's video, we're going to be looking at what is marine insurance, what are the components of marine insurance, what is the risk covered in marine insurance, and what are the type of losses in marine insurance. Stay with me and enjoy the video. Marine insurance is a type of insurance that protects vessel or ship, cargoes or the goods itself, and other interests from damages arising from maritime transport, that is in the cost of moving goods over the sea. What is majorly covered in this risk is that we're saying that there can be damage to the ship used to transport those goods. There can be damage to the goods itself, and then there can be other damages arising leading to third party or the cost of freight itself. So, what else is important to look at? We want to look at the component of marine insurance. We have four major components. One, we have what is called all insurance. That is, we're saying there can be a cover for the vessel itself, where the vessel damages and then insurance make payment for the damage of the vessel. Also, there can be a damage called cargo insurance, meaning they are saying that there can be damage for the goods being transported. So that means insurance will cover for that goods being transported. For example, say Dangote wants to move petroleum products from Nigeria to, say, United States of America. There is an marine insurance that covers for the movement of that petroleum product from one location to the other. And then there's a marine insurance that covers for the ship itself that is transporting that product. Also, the third part is the freight insurance. What is freight insurance? We're saying that the insurance that covers for the freight revenue that may be lost as a result of a loss that happened in the cost of transporting that goods is also covered in the cost of insurance. That's freight insurance. And then we can have liability insurance. We're saying that in the course of moving this product, there can be damage to third party. There can be injury to crew. There can be pollution caused in the environment and several other things that can occur affecting the environment as a whole. Therefore, the insurance that covers for it is called liability insurance. We call it the P&I insurance. So definitely, these are covered in insurance. So what are the basic risks that are attached in marine insurance in the course of moving your goods? One, there can be storm, meaning that in the course of moving these goods, there can be storm arising in the course of moving them, or what is called the rough sea. Two, there can be thefts, where any of those goods can be stolen in the course of moving them. Marine insurance definitely covers it. Also, there can be what is called collision, meaning in the course of moving, you can collide with another ship, and so insurance will definitely cover it. There can be natural disaster. Of course, we know that those can happen along the course of moving the product on itself. And also, there can be jettison happenings. Sometimes when the boat is about capsizing or the ship is about capsizing, there's a need to throw away some products, meaning to make the vessel lighter, you may need to throw away some cargoes so as to be able to move the product to the right location. And these are basic things that insurance will cover for you in the course of moving your product about. So you may want to ask, what are the actual types of losses that are also covered in insurance? Marine losses are majorly two. Marine losses are actually total loss or what is called partial loss. If we say total loss, we see it in two perspectives. We can have total loss itself, which means we are saying actual total loss is when there is a total loss to the ship itself, maybe in the course of moving the goods, there was a damage to the ship, and then or damage to the goods that you are transporting, and then you have to pay for the entire value of that loss. But also we can have what is called construction total loss, similar with that actual total loss. But the difference is that we're saying sometimes there can be a damage where that damage is more than the cost of insurance value. That means it can be more where the ship, in the course of moving, there was a damage to it, and then that value is more than the cost that they have been insured. So we say that's the constructive total loss. And so those are the two categories of losses we can have. We can have a cost that is irrecoverable, or we can have a cost that the cost of repairing the ship itself is more than the insurance value. Also, we can have what is called partial loss. Of course, in our second we will look at this more. We can have it with respect to particular loss, where we're having a particular or some specific items of whatever is being carried is damaged. But you can also have what is called general average, where there are also kind of damage that happen. Like I said, we'll look at this in our subsequent video and expand this more on marine insurance. Finally, to note, the marine insurance is usually backed out by the Marine Act 1906, meaning that the Marine Act 1906 simply is saying a contract of indemnity regarding any marine ventures or anyone who is involved in the marine business is guided by the Marine Act 1906. So finally, what have we learned in this video today? We have learned what marine insurance is about, to saying any movement of goods that occur on the sea is called marine insurance. We've learned that the components of marine insurance are all cargo, freight, and liability insurance. You also learned that there are several risks covered, which include natural disaster, storm, jettison, collisions with vehicle, and other kinds of risks covered. And then we also learned that there are two kinds of major losses: total loss and partial loss. And this is backed up by the Marine Act 1906. We hope you're enjoying this video. For more of our videos like we always share to you and share more important content, we'd like you to like, share, subscribe, and much more share with your large community.